The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender at MLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Putting a roof over your head without the headache. Get answers to all of your home buying questions. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And our Sunday best to you. Good morning and welcome to the Accunet Mortgage and Realty Show. I'm Steve Kettler, along with Accunet Mortgage and Accunet Realty Advisors owner Brian Wickert and Chief Millennial Loan Consultant David Wickert. As always, if you have a question, you can call it or text it into us on the Accunet Mortgage talk and text line. That number is 414-799-1620. Well, an interesting start to our Sunday as we're watching Hurricane Irma have its effect on Florida. So I don't know if we still have Brian and David this morning.
We are not in a hurricane zone, but I did bump my connection here to the station, and that's what knocked us off the air.
Okay.
So we're working on getting that connected here again. We'll be back up on the regular connection here in just a minute. But I heard you talking to your buddy down in, I didn't catch what city he was in Florida. Where was he calling in from?
Palm Beach Gardens, and I have a place in Jupiter, Florida, which is about 3-4 miles to the north of his on the Atlantic coast side. Okay.
Well, of course, now the brunt of the storm is expected to hit on the Gulf Coast side, where we have, as you were talking, I was listening to the show, you know, that there are a lot of Wisconsinites along that side of the Florida Peninsula. And I was just looking up because we are licensed. Accunet Mortgage is licensed in Florida. And we've been doing business down there for 10 years. Not a lot of business, not as much as we do in Wisconsin by any stretch of the imagination, but we take care of a lot of Wisconsin customers down there. And I just looked up a friend of mine whose home we've loaned on in Old Naples. And, you know, houses are expensive down there. You know, you can easily, you know, get into the $2-3 million range because the land is so valuable. And I did check. So I'm going to say his house is now worth, you know, $3 million. And I did check, and he is in a flood zone. And so, you know, one of the things is you're probably talking about with your friend that causes most of the damage in a hurricane situation like this is damage from flooding. You know, that storm surge, which, what was the latest number you saw? Was it like 10 feet to 15 feet along the Gulf Coast?
Yeah, well, the folks on the Gulf Coast side, yeah, we're talking 9+ feet, and that's projected to go 10 to 15 miles inland. So, you know, Cape Coral and Punta Gorda and a lot of those, you know, low-lying areas, they, depending on where this thing comes ashore, they could be dealing with significant storm surge.
So, you know, that's the biggest damage. And what I wanted to point out is that if you have a mortgage and you are in the FEMA flood zone, FEMA, the Federal Emergency Management Agency, does all this mapping all around the country and says, you know, what are your chances of getting flooded out? And if you're in flood zone A, anything that starts with an A, and so I looked at my friend's home, and he's in flood zone AE. So if you're in a flood zone that starts with the letter A or V, like Victory, then you're required to get flood insurance. If you don't have a mortgage or you're in a different flood zone that's labeled B, C, or X, you're not required to get flood insurance. But here's the really bad part. The maximum flood insurance you can get from FEMA in the National Flood Insurance Program, are you ready, is $250,000.
Yikes.
That's the max. So let's look at it this way. The insured, this is according to a risk management company article that I found online today, Air Risk Management. They've estimated that insured losses in Florida could be as high as $50 billion. Okay? So now let's say that you're a person, if anybody's familiar with Florida, let's say that you're east of I-75. I haven't been able to remember a property to look up for somebody that we've loaned on east of I-75, but I'm going to say maybe they're not in a designated flood zone. So you're going to have tens or hundreds of thousands of properties. And of course, don't forget about Harvey. That's like yesterday's news, but there have been billions and will be billions of dollars of uninsured damage. Okay, uninsured damage. And by the way, that $50 billion figure I just quoted does not include FEMA flood insurance claims. So that's just private insurance claims. And remember, your typical homeowner's insurance policy, well, not typical, all homeowners insurance policies exclude flooding. So what you're hoping for is that you can prove to the insurance company somehow that your house was damaged by wind and rain, before it got wiped out by the flooding. Because if you don't have flood insurance and your home is swept away by flooding, you don't have coverage. That's really sad. And, nobody likes to pay for insurance they don't think they need, right? And so there are thousands and thousands. The other number that I saw was there are 8.5 million properties that are, and this was a number from CoreLogic, that are at either high, very high, or extreme risk of wind damage because of Hurricane Irma right now, and 3.5 million from flooding and storm surge. So when we come back, let's talk about what happens if your house gets, wiped out by the flood and you don't have flood insurance. Do you still have to keep paying your mortgage? Let's talk about that a little bit, and when we come back.
Right here on the Accunet Mortgage and Realty Show on 620 WTMJ.
Getting you into the home of your dreams. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Flood insurance, and we had to deal with that here in Wisconsin back in July with some copious rains that came down. But for our friends down in Florida and Texas, let's say you get flooded out by a hurricane or something along those lines. You don't have flood insurance. Do you still have to keep paying your mortgage? How does that work, Brian?
Well, as a matter of fact, you do. Even if your house gets wiped out, and in the case of, the worst case scenario is you did not have flood insurance, and your house is a complete, loss, you still have to make your mortgage payment, which is really hard to stomach as you go through this process. Now, David was doing a little research on disaster loans, and what did you find out, David?
That you can get a new low-interest disaster loan for up to $200,000, and that can go to pay off your existing mortgage. But if you own a $500,000 house in Naples, and you can only get a loan from the SBA for $200,000.
Yeah, we're obviously, guys, we're having connectivity issues here, so maybe we'll repatch with you on the phone or something. But while we're doing that, I have friends that have a similar situation. They just sold their condo in Tampa Bay and are set to close here at the end of this month. And they're right on Tampa Bay. So depending on whether or not they get some severe storm surge that could literally wipe out their condo building, which I think was built back in the 70s. How does that work in a situation where, yes, they have flood insurance, but what does that cover? Does that cover what the sale price would be, or is that just a replacement value?
It's only covers the first $250,000 for one thing. And so I think that this is going to bring real estate transactions wherever the Hurricane Irma causes significant damage. It's going to bring real estate transactions to a screeching halt for two reasons. One, any lender who's lending money on that property is going to have to send out an appraiser to verify the condition of the property. Because if the property, and even, in the case of a condo, if the common areas are all messed up, your condo unit might be fine on the 10th floor. But, what if the entire, parking garage is messed up and the pool and everything else? as a lender, we want to know, what's this property worth now after the hurricane blew through? And, what kind of condition is it in? We're under an obligation to, certify to everybody up and down the food chain that property is in good and marketable condition. Well, if it's a single-family home and it's, half wrecked or even a little wrecked, it's not in good and marketable condition anymore. So I frankly have not had experience in the 18 years that Accunet has been open for business. We have never had a market area that we've loaned in be this significantly affected by a natural disaster. So this is a first for us, but I think it's going to be very problematic. Plus, maybe that buyer wants to back out, right? Once they see all the damage around there, it's like, I don't want to buy in this area anymore. Forget it. And, who knows what's going to happen to the infrastructure around there, roads, stores, everything under the sun. And it's just really going to be bad. So our thoughts and prayers go out to all those people that are affected. And there are, as we said just a couple minutes ago, literally millions of people in the state of Florida. And let's not forget about the good folks of Houston who are, already dealing with it. So when we come back from this next break, there's a disaster of a much different sort, but affecting 143 million Americans. And that is the identity theft perpetrated on Equifax that was revealed just this past Friday. We're going to talk about exactly what I did and what I think our listeners should do when we come back.
Right here on the Accunet Mortgage and Realty Show, you can talk or text in a question at 414-799-1620.
Find a place to call home without the headache. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
While the Packers kick off the season against Seattle today at Lambeau, the Brewers are wrapping up their big weekend against the Cubs. You can catch the finale of The Crew and the Northsiders beginning at 12:45 right here on our sister station, 94.5 KTI Country. It's the Accunet Mortgage and Realty Hour right now on WTMJ. Brian Wickert and David Wickert are with us as we focus in on Equifax and that data breach that's affected close to 150 million people. I know you, Brian, mentioned that you and your wife were affected by this.
Yes, indeed. So let's call this a Category 5, credit identity data breach here. I think it's the largest one that I've ever read about and the most serious. And so let's say the what, and then let's cover the what to do about it. All right, so the what is that Equifax, one of the three major credit reporting bureaus in the nation, had a data breach on July 29th. And
wait, on July 29th?
On July 29th. So they said they discovered it on July 29th. And so now it's taken them this long to decide, we're going to tell everybody. So I've got a question about that. I thought you had to do it, sooner, according to federal regulations. I haven't had a chance to check that out. But nonetheless, they announced it this past Friday. And so cyber hackers got into their vast database of information, and they stole 143 million records containing consumer Social Security numbers, birth dates, addresses, and then for 209,000 people, so a mere fraction of that 143 million, they also got credit card number information, okay? But those are the three, big things, that I need as a mortgage lender to get your credit report. I need your address history for 2 years. I need your Social Security number and your birth date and, of course, your name. So they got the names, too. Now, at Accunet Mortgage a couple years ago, we decided to beef up our consumer identity confirmation practices. And so now when we obtain somebody's credit report, we will ask them questions from the credit report that only they would know in order to verify that we're talking, let's say, to the real Steve Kettler. But, let's say you're doing stuff online, this is just a big, big, big deal. All right, so I think 143 million consumers is something like 2/3. So I was curious and said, I wonder if I'm one of those people. Well, all you have to do, folks, and I'll put out a blog post on this tomorrow, but all you got to do is go to Equifax.com, and in the middle of the page there is a giant button that says, if you're worried about the data breach, click here, and you click on that because they've established a separate website. But just start out by going to Equifax, that's EQUIFAX, Equifax.com. Click on that big button there on the on their homepage. Then, after you click on that button, what does it say, David? Click here.
I'm just laughing that the website name was available as if they already had this, lined up before they
No, that's right. But then when you go to the next page, you got to scroll way down to the bottom. Yep. David's doing this, and you have to click on
enroll.
Or
potential
impact. So first you click on potential impact, and then you scroll down and you
have to check potential impact.
Check the potential impact, and then you're going to put in your last name and the last 6 digits of your Social Security number.
Correct.
To find out if you were one of the consumers who had your data breach. So I did that this morning, and sure as shooting, I'm part of the lucky group, and then so was Becky. Because remember, even if you're married, you don't have a joint credit identity. You each have individual credit identities. And so I went through that routine and found out we were both part of the data grab. All right, so one thing you can do then at Equifax is you can enroll for free in a credit identity protection program. And it's free for 1 year. So I did that. But when we come back after the news here, I'm going to tell you what else I did and what I think any prudent person who's part of this group should do. We'll cover that when we come back after the news.
Right here on the Accunet Mortgage and Realty Show. Let's get ready to bring Belinda Babinek in here from the WTMJ Breaking News Centers. We're also continuing to follow Hurricane Irma, and we may be able to try to squeeze in an update from ABC or CBS as well. Good morning, Belinda.
Getting you through the home buying process. Welcome back to the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And David Wickert as well. So we've been focusing in on this Equifax data breach and some things to think about and consider as this starts to unfold.
So step one is to go to Equifax.com and find out if you are part of the 100.
Yeah, I think we're going to switch these guys over to the phone once again as our connection clearly is not wanting to cooperate this morning. Here we go.
Yeah, maybe it's part of the storm surge already coming up here through the something sphere. But anyway, the first thing you should do is go to Equifax.com and find out if you were part of the 143 million. Then take advantage of freezing your credit score and report. So that's my big recommendation, is the only thing you can really do to make sure you can monitor, that's great. But if you want to make sure that nobody is going to be using your identity to go out there and get a loan or a credit card or a boat loan or a student loan or a mortgage, is to put a freeze on your credit report. Now, you have to do that at each of the 3 credit bureaus. So again, I'm going to have a blog post up tomorrow at Accunet.com to reiterate these steps. The best of the 3 was TransUnion. So I did this all this morning. I went to transunion.com, TRANS union.com, and right on their homepage, they have an exclamation point consumer alert. If you're concerned about your identity theft, you can lock access to your TransUnion credit file and receive ongoing credit monitoring for free by enrolling in True Identity. And so you just click on that link. Very simple form to fill out, I thought. And then you can, with one click of the button, once you establish your login criteria, lock and unlock your credit report right there from your TransUnion website. And then the one that was difficult was Experian. That's the third credit bureau. So there are three. Equifax, who had the data breach. TransUnion is the second one, and Experian are the third of the three big credit bureaus in America. And at Experian, when I tried to freeze my credit report, one, they wouldn't allow me. They said, based on the information you submitted, you cannot freeze your identity online. I don't know why. And so they said, now mail in all this information and your request along with $10, which I'm like, man, you guys have got to take a lesson from TransUnion here and do this for free at this time of great need with all these consumers out there who have had their identity compromised. So I'm working on that. So my advice is go ahead and freeze your credit report. Now, David, what problem? Oh, you're not on. That's right. Your microphone. I'm just talking to the phone. The problem that this creates if you then want to apply for a mortgage, and we're going to talk in just a couple moments about how low rates are and why you should consider refinancing. If you freeze your credit and you want to apply for a mortgage or you want to get pre-approved to buy a home, guess what? You got to unfreeze each of your three credit reports. Now, I know it's free at Equifax and TransUnion, but Experian is going to charge you $10 to unfreeze it. And then because we recheck your credit, so let's say you're applying for a refinance, we're getting those done in about 30 days. We would recommend you probably leave your credit thawed or unfrozen during that little window where you're doing the refinance. But that, I think, is the only way that you can really protect yourself. Oh, and then, by the way, I did also finally enroll both Becky and I in LifeLock. That's the company that advertises a lot on radio, television, the internet. They are having a bonanza, I'm sure, of sales. So I signed up for the standard plan, which covers a lot. They have more expensive. That was $9.99 a month per person. So I decided it's worth it. And they give you a little discount if you pay up front. I decided it was worth it to me to go ahead and spend that $120 of all the other things that I spend money on, you know, Netflix and Amazon Prime, blah, blah, blah. I thought, you know what? My credit's important to me. I'm going to go ahead and spend the money to get LifeLock, which then monitors your credit and gives you some other benefits. So that's my recommendation on that. Really bad data breach. When we come back, we're going to talk about just how low mortgage rates are and how to overcome refi phobia after this break.
Right here on the Accunet Mortgage and Realty Show on 620 WTMJ.
Expert advice on buying a home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Well, he's a member of the Packers Hall of Fame who spent his entire career in Green Bay, and this afternoon Larry McCarron will once again be behind the mic, where he's part of the game day broadcast since 1995. Before that, though, he sits down for an exclusive one-on-one with our Greg Matzik. It's this week's edition of WTMJ Conversations, coming up right after the 11 o'clock news right here on 620 WTMJ. Right now, it's the Accunet Mortgage and Realty Show with Brian Wickert and David Wickert. So we're focusing in on rates and overcoming refi phobia, because rates are really low once again.
Totally unexpected in terms of how low rates are. 30-year fixed rates were projected to be in the low fours by this time, earlier in the year. And what's happened instead, I'm calling it the trifecta of influencers, because there are typically three things that can influence interest rates. So one is some unexpected event, and in this case, we've got two of them. One are both hurricanes. That's a big unsettler for financial markets, because just think, Houston's the fourth largest metropolitan area in America. And then Florida, I believe, is now, have they snuck up to the second largest state in the union, second or third? And you've got all these people along the Gulf Coast that are, you know, potentially going to be really impacted. And not just property, but think of all the business activity that's going to be interrupted, and employment, and you name it, over the next several weeks here as people recover. So that's one thing. The second thing that nobody's been talking about lately, but it's still, I believe, a live issue, is the North Korean missile threat. So you've got an international geopolitical event that's scaring financial markets. And when financial markets get scared, people pull money out of stocks, which are all about future optimism, and they hunker down and they put them in safe bonds. Well, U.S. Treasuries are still considered the safest bond in the world because they're backed by the full faith and credit of the United States government. So we've seen the 10-year Treasury yield drop down to about 2.05. So we're real close to having what traders call a one handle, meaning 1.9 something. That 2.05 level is the lowest, Steve, that interest rates have been since Election Day, 2016, presidential election day, November 4th. What that's done for the 30-year fixed is this. Accunet Mortgage on a $200,000 30-year fixed rate, or really any number of years between 21 and 30, we can offer a 3.75 interest rate if you have 25% equity and all the other right stuff with no points. That's really low. The APR is 3.82. Now, if you want no points and no loan costs, where Accunet picks up the loan costs for you, we can almost get there at 3.875. I think it ended where you might have to pay like $100 or $150 of closing costs. So that's darn near. If you only have 20% equity, we could definitely do 3.99 on the APR with no points and no closing costs. Now, the 15-year fixed, if you wanted to pay some closing costs, we can get you what I call the trophy rate of 2.99, the two handle on the 15-year fixed, which is really popular for people who are about, 50 years old, because they think, and they can, I can get this paid off before I retire. And the other maneuver that we can really help people with right now with this dip in rates and the combination of home prices going up, because we talked about that last week, is dropping their monthly PMI or monthly FHA mortgage insurance, which can be $100 or more a month without a lot of trouble. And so even if you have only 5% equity, we can help you with a refinance and potentially save you a lot of money, because maybe you bought with 5% down a year ago. Well, that mortgage insurance at 5% down is a lot more expensive than if you now have 10 or 15% equity, because your home went up in value and you paid your loan balance down. So most people have suffered from refi phobia for a couple reasons. They think it's going to cost too much money. Well, if you're paying close attention, I just said we have options where you don't have to pay any of the loan costs. So that's pretty hard to pass up, a zero-cost refinance. Secondly, they think, my rate's not low enough. Well, with home prices going up and rates where they are, all you really need to do is drop your rate 0.5% to make a refi worthwhile if your mortgage balance is, let's say, $150,000 or higher. And they think it's going to take too much time. Not at Accunet. We can get everything done over the phone or online at Accunet.com. So we think we've got the cure for refi phobia, and the window of opportunity is wide open. When we come back, I'm going to tell you a story about one customer I helped this week do a refinance. And he was going to hold off because he thought, I'm going to wait for rates to go a little bit lower. I'll tell you that story when we come back.
Right here on the Accunet Mortgage and Realty Show on 620 WTMJ.
Expert advice on buying a home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
So we're focusing in on refis, and Brian has a tale and story from the front lines of mortgage lending when it comes to wanting to hold out and wait for that lower rate.
That's right. So I had a customer contact me this week, a past customer. And by the way, if you're a past customer, we're trying to get through all of our data to proactively reach out to folks who would be in the money for a refinance. But, generally, if your rate right now is 4.3 or higher, you could, and let's say your loan balance is $150,000 or more. Because frankly, if you have a $40,000 loan amount, moving your interest rate is not going to affect your monthly payments just because you don't have that much debt, outstanding. So it's not going to make a big difference in your life. So the larger the loan amount, the bigger impact interest rate movement can have. But I had a client who wanted to borrow some money for a big kitchen remodel, looking to pull out $75,000. Now, here's a guy who hit the lottery of rates. Back in 2012, 5 years ago, we snagged them, are you ready, a 3.25 30-year fixed rate. So he's been paying down on that for 5 years, but he's a smart guy, works in the financial services industry, and he knows that if he went and took a home equity line of credit, that's a variable rate instrument whose rate is likely to continue increasing as the world and American economy continues to improve. So he was interested in pulling out about $75,000 on a 30-year fixed rate loan. So cash out refinances are priced a little less favorably, but in his particular situation, because of the relatively large loan size, we were able to offer him 3.75% on the rate with an APR of 3.78 and just $400 of total loan costs. And so he got back to me via text and said, you know what, I think rates are going to keep going down. And I texted him back and then called him. I ended up having a phone call with him and saying, do you realize that for rates to go from 3.75 and down to 3.5, we're going to have to see a further tremendous rally in the interest rate markets, which probably ain't going to happen. And then I think what really got him is I said, and you know, even if your rate went down 0.1% to 3.625, that's only $28 a month in your monthly payment. And it took him about 2 nanoseconds to go, oh, okay, I'm going to lock in right now, the sure thing. And so we've got him going on that. Now, here's the other cool thing that we can do most of the time. Even when somebody locks in a rate with Accunet, if rates subsequently go down 0.25%, so let's say rates do go down to 3.5% on a new lock, I can typically move that borrower's rate halfway down from 3.75 down to 3.625, typically at no cost. So that's a free float down if rates move at least 0.25 point. If they only go down that 0.1%, Steve, you know, hey, we took our lock at 3.75 and we can't really improve it. That's a pretty good deal. So I think that was another feature of our particular rate lock program at Accunet that set his mind at ease.
Sure.
So he's going to be, you know, by the way, then we sent him the e-sign documentation, which he returned in a day, along with all we needed to document his loan was a pay stub and a W-2. And we will probably have the appraisal back by the end of this coming week. We might be closing his loan only 15 to 21 days after he made the first phone call. So that's how fast, that's how easy we have this whole mortgage thing put together now. So it's really not the kind of hassle that it used to be, and that frankly some mortgage lenders still make it out to be, or push on their customers where you got to come in for an appointment, or you know, you have to do everything by paper and so on. We have really ironed out all the kinks. People, I can't tell you. Have you done an e-sign transaction for anything lately?
Yeah, it's very slick, and man, it just moves it right along.
Yeah, I mean, you know, in the old days, we'd have to overnight the paper to a person, and it would sit on their desk for a couple of days, you know, or the weekend, and then they finally return it. You know, take a week, sometimes 10 days or 2 weeks for them to get their wet signed papers back to us. The other thing that we're doing a lot of for refinancers, by the way, are in-home or at-office closings. I ran the numbers, and I believe 58% of our refinance customers so far in 2017 have taken advantage of an in-home refinance closing. How convenient is that? You don't have to take time off of work, and we can do it in the early evening hours. And many, many people are doing that, which we think is great. All right, so while rates are low, the thing to do right now, before the Packer game starts, click on the blue button at Accunet.com, ACCUNET.com. You can get a no Social Security number required refi checkup. Whether you're a new customer or not, we think our closing costs are lower than anybody else's out there, typically $1,000 to $3,000 less than your bank or the big online lenders. You can also get started with a rock-solid pre-approval to buy by clicking on that blue button. Thanks a lot, and we'll be back here same time next week.
Very good, and we'll check in with Belinda Babinek next in the WTMJ Breaking News Center on Hurricane Irma.
The preceding was a paid program. Advice and opinions expressed during the Accunet Mortgage and Realty Show are solely that of the hosts or guests of Accunet Mortgage and Accunet Realty Advisors and not WTMJ Radio or Scripps Media Incorporated.